All right, let's get right into it. Today, we're taking a deep dive into a really fascinating and, well, unique asset class that pretty much lives in its own universe, litigation finance. So yeah, the verdict is in, and we're going to break it all down. So let me just start by asking you this. What if there was an investment out there that genuinely couldn't care less if the stock market tanked tomorrow? I mean, what if it didn't matter if interest rates shot up or inflation went crazy? Kind of sounds too good to be true, right? Well, that's pretty much what we're talking about today. It's an investment that, and I love this description from our source material, marches to the beat of its own gavel. It's totally disconnected from the day-to-day drama of Wall Street. So what is this thing? What exactly is this asset that just ignores all the usual market forces? Let's get into what makes it such a different kind of beast. To really get it, you first have to understand the problem that this whole industry was created to solve. Just imagine you're a small company or even just one person, and you have an airtight lawsuit. You've been wronged, the proof is there, you're almost certain to win. But you've got one giant problem. Lawsuits are incredibly, insanely expensive. And that is where litigation finance steps in. It's basically when outside investors come in and say, hey, we'll front the cash for your lawsuit, the lawyers, the court fees, all of it. In return, they get a slice of the pie. But here's the kicker. They only get paid if and only if the case is won. Okay, so that's the big picture idea. But how does a deal like this actually play out in the real world? Let's walk through it. The process itself is pretty simple on paper. It starts with someone who has a really strong case but just doesn't have the money to fight. So an investment firm steps in and pays for everything. Now, if they win, boom, the firm gets its agreed upon percentage. But, and this is absolutely the most important part, if the case is lost, the investor gets zero. Zilch. Nada. That money is just gone. And don't for a second think this is some tiny little niche market. This has quietly grown into a multi-billion-dollar industry. We're talking about serious, heavy-hitting institutional money getting involved. Pension funds, university endowments. They all see something special here. Which brings us to the real reason all these big players are so interested. It all comes down to what we call the non-correlated advantage. Honestly, the entire appeal, the whole investment thesis, can be summed up in just 3 words: non-correlated returns. For a portfolio manager, that's like finding the holy grail. It's true diversification. Let's just paint a picture here. Imagine the Dow has a horrible day. It drops 1,000 points. Everyone is panicking. Now ask yourself, does that change a single fact in a patent dispute between 2 tech companies? No way. The outcome of that lawsuit is totally 100% unaffected by what the market is doing. So the benefits here are just huge. Your returns are basically insulated. They're in their own little bubble, completely separate from the financial world. The outcome is driven by the facts of a legal case, not by interest rates or global economics. And because of that, it can be a phenomenal tool to diversify a portfolio. But, and yeah, this is a very, very big but, it's not all upside. We have to talk about the risk, which is, to put it mildly, an all-or-nothing gamble. You have to go into this with your eyes wide open. The potential for reward is huge, for sure, but the risks are just as big. And most importantly, they're binary. There's no middle ground here. When it comes down to it, there are only 2 ways this can end. If the case is won, you get your slice of that big settlement. But if the case is lost, well, it's not a small dip. It's a total, complete loss of every single penny you put in. And it's not just about winning or losing. There are other major risks. For one, this is super illiquid. That means your money can be tied up for years while the case crawls through the legal system. We're talking 5 years, 7 years, maybe even a decade. This isn't something you can just pull your money out of. So yeah, you could lose everything, and it might take 10 years to find that out. So who in the world is this for? Well, let's be clear, it is absolutely not for the faint of heart. This is not where you put your emergency fund. This is not for your retirement money. This is for a tiny, speculative sliver of an already well-diversified portfolio, and only for someone who truly understands and is comfortable with all those risks. So what's the bottom line? Litigation finance is this wild, fascinating, and truly alternative asset. And I think this final quote just says it all. In this asset class, the biggest gamble isn't the market, it's the jury. At the end of the day, you're not betting on stocks or bonds. You're betting on the justice system itself.